day friends. In the subject of personal financial planning, I am discussing with you about the tax planning. In my previous lecture on the tax planning, what I discussed was that why tax planning is important. How through proper tax planning you can minimize your tax liability within the rules of the country. You are not evading the tax. Evasion of the tax is something wrong which should not be followed. But if through proper tax planning you plan your tax liability in such a manner so that your tax liability is minimized, it is good way of proper financial planning. So we talked about why financial planning is important, why the tax planning is important, how you can do the tax planning, what are the benefits of the tax planning, difference between tax avoidance, tax evasion and the tax planning, right? So today I'll be talking about basically the income tax rates, slabs which we call it. There are different type of exemptions that are available in the Income Tax Act and the deductions. Friends, as you must be aware that time to time in the annual budget of the Government of India, in the different Finance Act and the different years, the tax slab may vary. What I am discussing is that tax slabs which were being announced in the previous budget, that is applicable for the financial year 2022-23. When you talk of the financial year, as you are all aware by now, that the tax is being assessed, your income is being assessed in the assessment year. For the current financial year, that is starting from 1st April 2022 to 31st March 2023, the assessment will be 23-24. So your current financial year's income will be assessed in the next financial year. So whatever the rates that are applicable in the current financial year, at that rate your income will be taxed. So let me tell you briefly about the tax rates. And in this lecture, in this discussion of ours, I'll be focusing on individual tax payee. That is, there are different type of SSCs under the Income Tax Act, right? So we are talking of the tax rates that are applicable basically on the individuals and the rates that are applicable to the individuals that are also applicable to the Hindu Undivided Family, HUF, which we know popularly known as HUF. So let me tell you briefly about the tax rates. And these tax rates which you can see here, that these are for the people who are below the age of 60 years. Because as an individual crosses the age of 60 years, certain additional benefits are being given, certain additional exemptions are being given. So I am giving you the tax rate which are applicable to the people who are below the age of 60 years. If your income is below 2.5 lakh in the current financial year, your income is totally tax exempt. Means I will call it, there will be no tax, there is no tax liability on an individual whose income is up to 2.5 lakh. If it is 2.5 lakh to 5 lakh, then the rate of tax is 5%. Supposing a person's income is 5 lakh rupees. So the income between 2.5 to 5, that is 2.5 lakh, on this 2.5 lakh rupees, the individual will have to pay the 5% tax, that is 12,500 will be the tax liability of that individual. If the income is between 5 lakh to 10 lakh, then the 12,500 plus 20% of the total income above 5 lakh. Suppose a person's income is say 7 lakh rupees. So his tax liability or her tax liability will be 12,500 plus 20% of 2 lakh. So since the income is 7 lakh, so 2 lakh is the additional income above 5 lakh. So on this 2 lakh, the 20% will be charged, that is the 40,000 rupees will be the tax. So his total tax liability will be 52,500. If the income is above 10 lakh, then 12,500 plus 30% of the total income above rupees 10 lakh. That is 12 lakh 5,000 rupees is the income of the individual, is the tax liability. 1 lakh 12,500. Supposing the income is up to 10 lakh. So between 5 lakh to 10 lakh, the tax liability is 20%. The tax is taxable income is if it is above 10 lakh. So 1 lakh 12,500 plus 30% of the income above rupees 10 lakh. So this is the tax slabs in the important. Friends, why I am telling you these tax slabs? Because for financial planning, for tax planning, it is important that you should know under which tax slab your income lies, so that you can plan your finance, you can plan your tax liability accordingly. See, what the mistake many people do, that in the initial months, suppose you are a salaried employee, in the initial months you tell your accounts officers or you tell your employer to reduce to calculate the tax, or say to deduct the tax from your income at a lesser amount, right? Or at a lesser amount is being told. But if you do so, then in the last months, in the month of February and March of the financial year, your tax liability increases substantially, because the tax is being calculated on the total year's income, total financial year's income. So if in the initial months of the financial year, if the tax deducted is a low amount, then in the later part of the financial year, your tax liability will increase. And then you will find it difficult, because a substantial portion of your income will be deducted by way of tax by your employer. So then you will be in trouble, in the sense you will not able to manage your finance properly. So for proper financial planning, as and when the financial year starts, and you know that what is your estimated annual income during the current financial year, so you should plan your tax, and you calculate your estimated tax liability, and each month you get your tax deducted. You tell your employer to deduct the tax as per this annual tax liability, so that your financial planning is not being disturbed. So that's why knowing these tax slabs is important. So apart from this tax rate, tax slabs and the rate of tax, whatever the tax liability is, the Government of India in the budget, that is the financial year 2022-23, announced that 4% health and education cess are also applicable on the tax payable calculated according to the above tax slab for a salaried individual. What it means is that, suppose if your tax liability comes to be, say for example, 1 lakh rupees, your total tax liability as per your income tax bracket comes to be 1 lakh. So I'm not saying income, I'm saying your tax liability comes to be 1 lakh. And on this 1 lakh rupees, you will have to pay 4% additional education and cess. That is, your total tax liability will be 1,04,000 rupees. So apart from this, an additional surcharge is applicable for individuals with net income above rupees 50 lakh rupees. See, apart from this education and the health cess of 4% on your tax liability, you are supposed to pay, an individual is supposed to pay, or all those individuals who are having income above rupees 50 lakh rupees, they are supposed to pay additional surcharge. So the amount of surcharge is as follows. That is, these rates are mentioned here. Income is higher than 50 lakh but less than 1 crore rupees, right? So the surcharge will be 10% of income tax. Your income tax liability is 1 lakh rupees. So your income, say your income is, your tax liability comes to be, say 5 lakh rupees or 10 lakh rupees, 5 lakh rupees, right? So, and your income is say 55 lakh rupees. I'm just telling you a hypothetical figure. So on this tax liability of 5,50,000, additional 10% will be charged as a way of surcharge, in form of surcharge, provided your income is above 50 lakh rupees. Means when I'm using the word income, your taxable income is above 50 lakh. If it is between, 1 crore to 2 crore, the surcharge will be 15%. If it is more than 2 crore and less than 5 crore rupees, 5 crore or less, it will be 25%. And if it is more than 5 crore, then 37% is the surcharge rates. So friends, these surcharge rates are charged on the taxable liability. It is not that your income, this much percentage will be charged on your income, but whatever your tax liability comes to be, on that tax an additional surcharge is being charged at a rate which I have just mentioned, provided your taxable income, I'm not using the tax, I'm saying your taxable income is above 50 lakh rupees, right? So this is the rate of surcharge. But when the government announced these rate of tax government also allows certain rebates, right? And friends, I'll be telling you in the later part of my discussion that there is a old tax rate regime, that is the rates that are applicable on those individuals who follow the old tax regime, and there are new tax rates also. I'll be coming to that later on, but at this moment I'll say income tax rebates. According to the budget 2022, salaried individuals, when I'm using the word budget, means the union budget, the budget of the Government of India. Salaried individuals can avail an income tax rebate under Section 87A of the Income Tax Act 1961. So all this Income Tax Act is called Income Tax Act 1961. This rebate allows you to pay a marginally lower rate of tax by an individual whose income is less than 5 lakh rupees, right? This rebate allows individuals belonging to lower income bracket to reduce their tax liability. Suppose you are following old tax regime, right? Or you are following, the old tax regime, then the different rebates are available. But if you are following the new tax regime, especially for those who are following the new tax regime, an additional, rebate is being sanctioned under Section 87A, and this rebate is allowed only to those individuals whose taxable income, I would say, is below 5 lakh rupees. So who is eligible for this, claiming this rebate under Section 87A? Eligible for salaried individuals to claim the rebate under Section 87A for financial year 22-23. One must be an Indian resident, means if you are an NRI, you are not eligible for this. You are an not ordinary resident, you are not allowed this rebate. So only a resident Indian is allowed to claim this rebate. The total income after all deductions under Section 80 should not be higher than 5 lakh rupees. Means your income must be less than 5 lakh rupees after claiming all deductions. This rebate limit is set at rupees 12,500. That is, what is the maximum amount of rebate that you can claim under this? It is only 12,500. So this means that if your total tax payable is less than 12,500, then the total amount will be rebate under Section 87A. Suppose an individual's income is less than 5 lakh rupees and the tax liability comes to be 12,500 rupees. Then that individual will have to pay nil tax. No tax will be paid by that individual, since he will take rebate under Section 87A. So this Section 87A was being added in the last budget, that is the budget of 2022, in order to accommodate, in order to give extra, I would say, facility or to reduce the tax burden on the individuals whose income is less than 5 lakh rupees. Friends, Government of India allows various types of rebates, right? I'll be talking those rebates. It is basically, there are two rates at present in India, two tax rates that are applicable on individuals at present in India. One is called old tax regime or old tax rates, right? Popularly known as old tax rates, which I have just discussed at the start of my lecture. The other is new tax rates. The rate of tax is slightly lower as compared to the old tax rates, old tax regimes. But if you follow the new tax slabs, if you follow the new tax regime, tax rates, then an individual is not entitled for the rebates which is applicable for the individuals who are following the old tax rates. That is, all those individuals who will follow this rate of tax which I am going to discuss, they will not be entitled for various rebates which were applicable to those individuals who were using, or that is applicable to those individuals who are following the old rates. So you can have a look of these rates, right? Up to 2.5 lakh rupees, the tax rate is nil, means no tax will be charged. From 2.5 lakh to 5 lakh rupees, the rate of tax is 5%. From 5 lakh, this additional is there. From 5 lakh to 7 lakh 50,000 rupees, the rate of tax is only 10%. In earlier, in this income bracket, the individual was supposed to pay 20% tax, right? Here we say 5 lakh to 7 lakh 50,000 rupees, your tax rate will be only 10%. From 7 lakh to 7 lakh 50,000 to 10 lakh rupees, the tax rate is 15%. When I am saying 7 lakh 50,000 to 10 lakh, means up to 7 lakh 50,000 rupees, the tax will be charged at 10%, right? Tax rate of 15% will be applicable on only that income which is above 7 lakh 50,000 rupees, right? It should be very clear. Means if an individual's income is 10 lakh rupees, it does not means that on whole of the 10 lakh rupees, the individual will pay 15% tax. No, it is not the case. First 2.5 lakh rupees of income, no tax. From 2.5 to 5 lakh rupees, right, only 5%. From 5 to 7.5 lakh rupees, only 10%. From 7.5 lakh to 10 lakh, additional income means the above the 7.5 lakh, individual will be paying 15% tax. From 10 lakh to 12 lakh 12 lakh 50,000 rupees, the rate of tax is 20%. 12.5 to 15 lakh rupees, rate of tax is 25%. And income above 15 lakh will be charged at the rate of 30%. So these are called new tax rates as per the Income Tax Act 2000, which is applicable for the financial year 2022-23. So the rebate on earning under rupees 5 lakh will be still apply. So will surcharge rates as per the health and education cess. As I said, those people who are having income up to 5 lakh rupees, they are entitled for and rebate under section 87A, which I just mentioned before talking about these rates, right? 87. So you can claim that rebate of 12,500 rupees maximally, right? And as far as the 4% health and education cess is concerned, that will be applicable to the individuals. However, if you choose the new tax rates, means there are two tax rates at present in India. One is called, we call it old tax rates, the other is called new tax rate. So those who follow the new tax rates, you would be waiving several exemptions, means you will not be entitled for several exemptions and deductions like exemptions on various allowances like leave travel allowance, we call it popularly known as LTA, right? If you are going, suppose the government of India allow you to have a trip within the country, I will be talking this, which is, and you will be the government of India will give you the actual fare as per your entitlement, as per your salary level, all right? So under the new regime, whatever the leave travel allowance that is being given to you, given to the individual, that will be included in the income and that will be taxed, right? In the earlier regime, that is exempted from tax. So the various exemptions are not allowed under the new tax rates. If you follow the new tax slabs, which I talked about, if you follow these tax slabs, the various allowances and rebates, sorry, I would use the word rebate better. So various rebates will not be allowed, like LTA, HRA, house rent allowance, all right, conveyance allowances, relocation allowances, children's tuition fee, and other allowances under section 1014. So these allowances are not applicable to individuals who are following the new tax rates, which I have just mentioned, these tax rates. Deduction on housing loan interest payment under section 24, deduction available under chapter 6A, means there is a chapter called in Income Tax Act that is called chapter 6A, right? Section 80C, D, 80E, all these comes under chapter 6A. In case you are unsure about which regime to choose, means whether you would like to follow the old tax rates or the new tax rates, right? What you do is you calculate your taxable liability under both the tax rates. Whichever suits you, for individuals I am talking of, then you follow that. Means you are at liberty to tell to your employer that whether you will follow the old tax rates or you follow the new tax rates, right? So it is at the liberty of the individuals. But in a particular year, you cannot change your option twice. Once in a year, you can give in writing to your employer that which tax slab will you follow. Will you follow the old tax rates and which the various rebates are allowed, or you will follow the new tax rates where the various rebates which are allowed in the previous tax rates are not applicable. So which regime you want to follow so that your tax burden is being minimized. See, the whole idea of talking these tax rates, deductions, rebate is so that we can plan our tax liability, we can plan our taxable income so that the taxable liability is being minimized through legal means and our financial planning is made properly. After talking of this, let me come to certain exemptions. When I am talking of exemptions, what it means is that there are certain incomes which are not taxed, which are exempted from tax, which are not being included in calculating the taxable income. So what are these tax exemptions? Let's discuss that. There are various categories for the tax exemptions in India depending on the nature of income. What type of income you are getting? Some of the incomes that are exempt are agriculture income, pension income, and allowances, etc. What it means is that in India, the central government doesn't impose any tax. That is, when I'm using the word tax, I'm talking of the income tax on agriculture income, right? So this agriculture income, see what is the idea? You may say there is a debate in the country whether the agriculture income should be taxed or not, right? Because these days the various farmers who are having large land holding, they earn a lot of income. But still in India, in order to promote the agriculture sector in this country, and by and large, the large part of this population of this country is still dependent on agriculture. Agriculture is the main source of income, which includes the marginal farmers, which includes the small farmers, right? For them to, in order to facilitate, in order to, promote agriculture in the country so that the productivity improves and the income of the farmers increases, right? So the agriculture income under the Central Income Tax Act is being exempted from the income tax. There are certain pension allowances which are exempt from the taxes. So there is also deduction of tax at source that can be availed, right? So Union Budget 2022 provides extension of eligibility of claiming the tax holidays as exemption in capital gain for startups. See, Government of India, in order to facilitate the startups means who started their business afresh. You're an entrepreneur. You're a fresh graduate. You have done your BCom. You have done your MBA, and after MBA, you want to start your own business. You want to start your own startup, right? So for startup, there are various facilities which are being provided by the government, and under this, the Government of India allows various tax exemptions also. Tax exemption means if you invest in the startup business, there are certain incomes that will not be taxed. Tax exemption is a monetary exclusion that reduces the taxable income. Means because the income is not being included in the income, so obviously your total income will get reduced and thereby your tax liability will get reduced. So you can get complete relief from tax or reduced tax rates, or tax will be applicable on a certain portion only. Means either your tax will be totally exempted, right? No tax will be charged, or if your income, taxable income comes in the lesser income bracket, so certainly the tax rate will also be lower. Since in India we follow the progressive rate of tax, as the income increases, the rate of tax also increases. So tax exemption are offered to encourage certain economic activities. Union Budget also means, when I am talking of the Union Budget, basically I am talking of Union Budget 2022. It provides extension of eligibility for claiming of tax holidays as well as exemption in capital gain for startup. See, if you are a startup, basically what is the idea of this providing this tax exemption or tax exclusion, right? Idea is to promote startups. The idea is to promote agriculture sector in the country. So there are certain section of the society engaged in a particular type of business or engaged in a particular type of occupation, their income is exempted from tax. So a startup also, there is a term called tax holiday. Tax holiday means for a particular period of time, the tax will not be charged for them provided certain conditions are fulfilled. So, only a brief introduction I will be giving them. I will not go into detail of the various exemptions that are available, right? The incomes which are not being included in the income for the purpose of calculating taxable liability, like under Section 1, agriculture income. As I said earlier, if you are having income from the agriculture sector, your income is exempt from tax. Share from income of Hindu undivided family. If you are a member of Hindu undivided family, you are getting some income out of from your share of that work, right? Your income will be exempted from tax. Share of profit from the firm whose taxes are filed separately. Since it is being presumed if the individuals are also being taxed and the company is also being taxed, then there will be double taxation. So, if the tax has been filed separately, tax has been filled separately by the company, then the income that you get from your company, that will be exempted from tax. Income received in a casual form not exceeding rupees 5,000, and in case of horse race winning, it should not be exceed 2,500. See, there are certain like winning from the puzzle words, I mean lotteries if it is allowed, right? So there are certain income which are called casual income. There is no permanent source, there is a casual income. So casual income up to rupees 5,000 rupees is exempted from tax. But if it is a horse race, the exemption is only 2,500. Receipt from insurance policy. Some 20 years back, I had taken an insurance policy for my life. Right now, this policy is maturing. So whatever the money I received from this insurance policy, that is exempted from the calculation of the income tax. A scholarship to meet cost of education. Right. Suppose a student is getting a scholarship from some agency, from some trust or some government agencies, right? Whatever the education allowance that he's getting, that will not be included in his income, providedly that individual is spending that allowances or that scholarship to meet his or her education expense. Allowances of MPs and MLAs, right? Provided it doesn't exceed 600 rupees per month. Awards and rewards by central and state government from approved award by others and the approved rewards from central and state governments. Suppose an individual has received gallantry award, right? He has done something exceptionally well at the war field. So the award that is being given by the central government or the state government in form of cash, that will not be taxed. So income of members of scheduled tribe of north-eastern states of Ladakh region, the income should be arising from the region itself. What it means is, suppose you are living in a Leh, Ladakh, and certain type of income that you are accruing, right? That income will not be taxed. Idea is basically individuals who are living in the tough conditions. Leh, Ladakh is the extreme north of India, and it is very cold most of the time. It is, difficult to work. So in those areas, if your income is there, right? So there are certain income which are exempt from tax. Income of Ladakh resident, his income can arise in Ladakh or outside India, right? So only the income of resident of Ladakh region also. So leave travel assistance or encashment received, right? If an employee has gone for availing his leave travel allowance, the government of India, for that matter, even the companies give actual fare to the employees if you go for a leisure trip within the country in a period of time, right? So the allowance that is being given, that is exempted from tax. Allowances and perquisites that the government provides to citizens of India who provide their services abroad. See, in order to meet out the standard of living of the foreign country, there are certain extra allowances that are being given to all those individuals who are living abroad. So these allowances are exempt from the taxable income calculation. So I have just given you a broad idea about the different type of exemptions that are available to an individual. You can avail these exemptions, or put it this way, if you are getting income from these sources which I just mentioned, your income will not be included for a calculating of the income tax. So this, for financial planning, for personal financial planning, tax planning is an integral part of this financial planning, right? That's why I have discussed this tax lab. I will be continuing this tax applicable. What is the amount of tax that is applicable to different individual? What is the different rate of tax, and what are the deductions and rebates that are allowed to an individual? Thank you very much.